Price is actually having that bearish tendency we were looking out for yesterday. So hold on a second, so what I was saying, okay, yesterday we've been making profit on the gold since last week. Last week we saw the breakdown of that bullish trend line we identified on the daily time frame. We saw the breakdown of that bullish trend line, and during the course of yesterday's live session we saw price do a retest of that bullish trend line. You might be asking, what bullish trend line am I talking about? So let's go back to the daily time frame and see what we are talking about. So is it daily? I think it's on the weekly. Yes, on the weekly. So on the weekly time frame, we can see the bullish trend line that has been holding price action since the beginning of the year, and at no point in time did we see price come below that line. And anytime price does comes below that line, we normally see a sharp rejection of that area. And one thing that we saw happened since the month of April is that we saw this bearish move to the downside. We saw price do a sharp rejection of that bullish trend line. Price came back down to that bullish trend line, and we were hoping that this could be a reversal pattern in the form of a double bottom structure where price will be pushing to the upside. But that did not happen, as the structure we saw on lower time frame was tending towards a bearish momentum, as there is a possibility that price could still go to the downside further, which could give us a long-term signal of a bearish momentum, as a signal, a retest of structure, which would be a confirmation, could push price to the downside. This is a long-term perspective, mind you. But since we are looking at what is going to be happening this week or in the next couple of weeks, we scale down to the 1 hour time frame where we saw structures. We saw the first breakdown last week. We took advantage of this move. We took advantage of this. How many pips was that? I think over 2,000 pips move last week. And during the early hours of this week, we saw price come back to do a retest of that bullish trend line we identified on the weekly time frame. And what did we see? Very interesting. We saw price come back into the $1,805 area, did something that looks like a reversal pattern, as we saw a lower high, and price did a breakdown of the neckline of that reversal pattern, and the neckline of that reversal pattern is our key level at $1,805 area. And we already have the breakdown of that reversal pattern, which is our signal. We have a retest of that area, and I'm looking to sell the XAUUSD. So the gold at this moment is looking more bearish at this moment. And what we want to be doing on the gold is to sell the gold against the USD. Now, where will our take profit target be if we are going to be selling the gold? I think I explained that yesterday. We identify between the 170, I think $1,768 and $1,775 area as our take profit target. I forgot to label this area, so allow me to do a label so that we can have a visual clarification of what our expectations are during this week. So we have our TP target around this area for any selling momentum if that's going to happen this week. And how did we get our take profit target around this area? Well, very simple that is. If we look left, we have an impulsive move, which is an impulse leg, and definitely from a technical perspective, our expectations are we want to project this impulse leg into the future. We should be having something like this. And to make things a little bit more clearer, more specific, you might want to use your Fibonacci extension tool to get this precise figures. So if you run your Fibonacci extension tool through the previous impulse leg, what do we have? We aim at between the 127.2 and the 1414 area, and our TP target falls within this area. So this is what we're going to be looking out for this week, or probably this next coming week as well, as we never can tell if price is going to go this far this week, which dovetails to about how many pips that is. I think about 2,000, close to over 3,000 pips to catch if price plays out as expected. So if you're taking advantage of this move, kudos to you. But if you are yet to do so, let's look at what our expectations is going to be as we head into the New York session. So bringing out our line chart, I want to identify a temporary key level that we want to be using as our guide. as we head into the New York session. So if we look left, I'm looking at a $1,800 area, which is also a very, very strong psychological level. We have a $1,800 around here, and that is, we have this. Let's give this a different color. So we have, I think it's appropriate we label it so that we can key level at sorry, at $1,800. So let's just put this right below this area. Is it at the top? Okay. I think at the bottom will be most appropriate. So we have a key level here at $1,800 area. And if you are yet to take advantage of this move, then definitely we want to be looking for a breakdown of this key level. Then a retest of structure. The retest might come as far as the key level here at $1,805, or it might be around this area, after which we look for patterns on lower time frame that supports a trend continuation to the downside. Then you can now join this trade. However, for those who are already in this trade, if we see a breakdown of the key level at $1,800 area, then definitely we want to be adding more position to our existing trade. So this is my setup here on the XAUUSD. And to be on the safer side, to be more cautious, no, sorry, I think that's not the right word. I think to be more protective of our account and for us not to be in an unnecessary bearish momentum, this key level at $1,805 is serving as our yardstick going forward. As if price breaks above that area and does a retest of that key level, that is seeing a reversal pattern sitting right above that key level, then definitely we want to be switching our bias to a bullish momentum. You see, one interesting thing about trading the financial market is that we really need to be very, very, very flexible, as we don't want to be too static, because price action is changing every single time. And if price action is changing, we always have signs in the market that points at that direction that things are already changing. So we want to be always looking out for this kind of scenarios. That's why I have made things easier for you as we head into the New Year section by identifying structures and parameters that will guide your actions during this time when you're on your own.